explain how the 1031 exchange works for a investor and for a seller?
So what's a 1031 exchange? Let's define it first. 1031 exchange is when somebody's selling a property and they have some gain, they can actually pay the capital gains and be finished, be done with it. Or the IRS has a code called 1031, and it's called the Starker Exchange. It's also called the 1031 exchange, meaning you're not selling, you're exchanging. I'm going to sell this property. I'm going to not cash out the money, but actually I'm going to roll the profits into a similar, what they call it, a like-kind exchange. I'm not selling, I'm exchanging, getting a better property for me or something with a better potential. Now, it has to be of equal value or higher value. So if you're selling something of $1 million, you have to be buying something $1 million plus. $1 million or $1 million plus. If you have a debt of $500,000, you have to get at least the same debt, etc. If not, you're going to pay some taxes on the difference. So the way it works is the rules of the IRS say you have to identify up to 3 properties within 45 days. So you're going to sell your property, an investment property, and you can roll your money forward within 6 months, within 183 days. We want to know the 3 properties you have identified as potential properties you acquire, up to 3. You have 45 days to tell the accommodator, who is the company that's going to retain the money on your behalf and wait for you to say, I'm closing on the next one, and they will move the money out. Who gives you that accommodator? The escrow company, the title company that's going to handle your transaction. You call them, you say, I want to do a 1031 exchange. They say, call this company or this company. You call these companies, they will tell you what I'm telling you. You have 45 days to give us up to 3 addresses where you want to roll your profits into it. So when you sell a property, we know you're going to buy one of these 3 properties. You have 183 days total. So if you take 45 days out, the balance of the time will be the time you can close on one of these 3 properties and move your money forward. Now, when we are selling a property, I can tell the buyer, hey, listen, I'm going to do a 1031 exchange. That means when you close with me, I'm going to move the money this way. They say, okay. Now, when I am buying a property, if the seller tells me, hey, Cherif, I know you're buying my property, I'm going to do a 1031 exchange. That means when I actually pay them the money and all this, they're going to be looking for another property. I need to tell them, yeah, your property is under contract. I'm doing a due diligence. I'm not so sure I can close so quickly. So if you want to go identify one of the 3 properties in 45 days, fine. But I may change my mind because I have 45 days to change my mind. But don't worry, because you still have 6 months to close. So if I identified within 45 days, you, the seller, identified a property or 3 properties, and one of them you're going to buy within 6 months, you still have the balance of 6 months. Actually, do 183 minus 45. What's left? 143 or something like this?
138.
138. So you have another 138 days to close. So I need to tell the seller, hey, I may not buy, I have the right to cancel. So whether they tell me they want to do 1031 exchange or they don't, it doesn't affect me at all. I'm still going to inspect the property. If I like it, I'll buy it. If I don't like it, I'm going to walk away. And that delays them. So it can affect the seller when I'm buying. I got them because they're in such a hurry to know if I'm going to buy or not. They may drop the price. I can come back and renegotiate last minute and all this. They're going to be very amiable to make it happen because they don't want to pay the taxes. And when I am selling a property, so I was selling a property. I remember selling an apartment building in Sunnyvale, California. And this guy calls me and he said, I'm a broker representing a buyer and he's in a 1031 exchange. And we had 45 days to identify a property. And now 40 days have ran out and now we have a fight with this guy. So we need to find another property. We only have 5 days. Can we go see your property right now? I said, go see it. He went to see it. He called me 2 hours later. You want 1,480,000? Can we talk about 1,000,004? And we will make the deal happen right away. It's practically all rolled in from the 1031. We can close very quickly. I said, no, I'm not going to discount. Actually, I was hoping for bids that are a bit higher. Why am I going to discount? The guy's in a hurry. He's in a 1031 exchange. They paid me the extra money. So it's not really the best strategy, and does not affect us when we are trying to buy properties. I don't care if they're in 1031 exchange. I don't care if they're selling to retire, to split the money. That's their problem, their business. It's not mine. And when I'm selling, I usually don't do 1031 exchange. I have so many other ways to reduce my taxes, and I'm set up in the proper structure, proper jurisdictions with tax incentives, not to have to worry about these programs that give me a disadvantage in the market.
Jump into commercial real estate discussion like these people. Apply for CRE Mastermind. Click the link in description.